The world's population is getting older, and that has become a massive investment opportunity. Coming up, we'll hear from an expert investor about 8 stocks at the center of that story. So let's get started. This is Ticker Take. You know, when you think about growth investing, you often think about technology, and we cover a lot of tech here on Ticker Take. Today, we're zeroing in on an aging population because according to the WHO, by 2030, 1 in 6 people on the planet will be 60 or older. And by 2050, the number of people who are 80 or older will have tripled from 2020. Some of that is people living longer lives. Some of it is lower birth rates. Whatever the reason, today we're going to focus on 8 companies at the center of this transition. We're going to talk to expert investor Neela White, who identified this trend earlier than most, and she's going to walk us through those 8 stocks she's watching. But first, she gave us context on what's going on. All right, Neela White, thanks so much for joining us on Ticker Take.
Thank you for having me today.
So you are very passionate about the theme of longevity. People are living longer lives, but it gets complicated as you age. What do you think about the investment opportunity here?
I think right now we're in a day and age where this is just not a cyclical trend. This is structural. We've never been in such a powerful demographic where we can count on this is going to have decades and decades and decades globally of tailwinds. I mean, even when we look at right now, by 2030, globally, every senior, every baby boomer is going to be 65 or older. So when we think of the sheer numbers, these industries are well supported.
Okay, and it's one thing to see the investment theme. It's another to actually pick stocks that will be winners for your portfolio. So how do you do analysis on that?
I think when I look at those companies, I want to know that they have recurring revenues. So whether it's a client demand or the revenues coming through the government, the revenues coming through managed care organizations, that way it's a bit of an annuitized revenue. So I like that. I like knowing that they have a moat around what they're doing and diversified income streams. So when you look at a couple of the names, they don't just do one particular job role. They do many, which allows them to have diversification. So, you know, maybe if one area is not doing so well, another area picks up. I like that they have a good, clean reputation, especially because we're dealing with the longevity industry. And these are vulnerable people. So I want to make sure they're good companies with strong reputations.
All right. With all that said, let's get to Neela's 8 stocks. But first, a friendly reminder, this is not financial advice.
Stock number 1, Service Corp International.
Okay, well, most of the companies we're going to talk about today are tied to senior care or senior housing. This is a company that is well known in the funeral business, the cemetery services business. It is a well-liked stock. Tell us more about it.
I think no matter what we think about, as soon as we're born, we know we are guaranteed to die. And I know people don't like thinking about that, but when you look at the death care industry on the whole, it's a growing industry. Globally, it doesn't matter where you are, you need some sort of funerary rite and some sort of burial, some sort of ritual attached to that burial. So when you look at a company like Service Corp, they're broad range, they're global. In Canada, they operate under Dignity Memorial. They certainly have a cash base that they're able to do a lot of acquisitions of the mom and pop shops. And during COVID, a lot of those funeral homes that were family run and family owned, they ran into a bit of trouble with the whole going remote, not having funerals in person. And that really showed the gaps and allowed Service Corp to take advantage of consolidating a very fragmented industry.
Stock number 2, Addus HomeCare.
Okay, well, this is a very well-liked stock. More than 85% of the street gives it a thumbs up. Would not be surprised to see the shares over the long term advance at least 25%. What stands out about this business?
I think when we think of themes, the whole theme right now and globally as well is the whole aging in place. We all want to age in place, but if we need support, where's that support coming from? Typically right now, in North America, 70 to 80% of the care that we're receiving, if we're age and we need support, is coming from family. Well, at some point, family is not going to be able to do that with the growing economic situation of, 2 people needing to work and not take care of mom and dad. We're no longer a homestead. That I look at any company that provides in-home services, functional support with ADLs, end-of-life care, respite care, that can come into your home and take care of that. That's a growing theme. So as our population ages, I think companies like Addus and any other home care company will have growing legs for sure. And another, issue is because we are running into a problem where demand is increasing, but the amount of people able to fulfill the position is still decreasing. We're looking at price inflation right there, right? So they have legs, they have pricing power.
Stock number 3, Welltower.
This is definitely a standout company when it comes to senior housing, gets support from at least 80% of the street. They would not be surprised to see at least a double-digit return for the stock over the next 12 months. Tell us more about the Welltower story.
Welltower, it's a large U.S.-based company. They own medical offices and senior housing. And just recently, they actually started double downing on their senior housing. Of note is March, I think it was, of 2025, they purchased Amica from the Ontario Teachers Pension Board, which when you think of Amica, that's such a well-known name in Canada. Has great reputation, is luxury senior living and retirement homes. So when we look again at the theme of retirement living, senior housing, I think we have to look at, there are sort of 3 major systems: aging in place, which is your home care system, retirement homes, which is the middle system, and then long-term care. Right now, retirement homes are in such a unique position that because there's such a wait list to get into long-term care, they're able to fill this gap. And you'll notice as time goes on that the menu of options that they're able to provide as support, so including memory care now and end-of-life care, it really is growing, which puts them in a very unique, profitable spot.
Stock number 4, Chartwell.
Also a senior housing play, and while it doesn't have as many analysts who cover it, the 10 who do all like it. Tell us more about Chartwell.
A little bit similar, Chartwell, is to Welltower. So it is, again, senior housing, it's retirement living. And again, it's the advantage with retirement living when you look at it as an investment theme is the prices that the retirement homes are able to charge, they're not governed necessarily by a body, whereas long-term care, it is price fixed. So, the margins are higher. The care level tends to be a little bit lower because when you go into retirement living, it's more of a social model. So it's not as supportive as intensive right now. So it's higher margins. Chartwell, well diversified across Canada, across 4 provinces. They're certainly trying to expand right now. Again, it's a Canadian name that is highly recognized. And again, a growing theme within the whole aging housing supportive system.
Stock number 5, Sienna Senior Living.
Well, like Chartwell, this is a company that doesn't have that many analysts who cover it, but the ones who do generally are supportive, has more than 80% support from the street. What stands out about Sienna?
Sienna, I find, is a very interesting structure because it's actually a bit of an integrated model. So they have both retirement stream of income, which again tends to be client budget based. Can you afford it? And then it also has the long-term care arm, which is government subsidized government revenue. So when I look at a company that has a diversified revenue stream, so higher end retirement living and consistent revenue, I look at that and I think no matter what the market's doing, I think we don't have to look at what's going to be the blip. I mean, we did see when obviously with COVID, all retirement living senior housing was affected just because of the mortality rate that suddenly increased. But it's a growing theme. It supports a pocket of need on both budget ends. And I think what consumers, when we look at a stock name, any stock name, you have to look at what is the demand. The demand for long-term care, it is dependent on a waiting list. So it's needs-based. It's not budget-based. For the most part, it's needs-based. And just in Ontario alone, the wait list is 48,000 people long. That is demand for decades.
Stock number 6, Extendicare.
Okay, so continuing theme here of senior housing and care, and a company that doesn't have that many analysts who cover it, but the ones that do cover it definitely like it. What stands out about Extendicare?
So Extendicare is just long-term care homes within Canada. They're the biggest national provider of long-term care. And again, we're looking at a stabilized revenue stream because it is government co-funded. But what also is unique about their model, so not just long-term care, but they're providing in-home services. So similar to Addus providing in-home services, Extendicare under the name of ParaMed's doing that as well. So when you look at in-home services, that as well supports the aging in place theme. And what we know is supportive care doesn't tend to be a one-off contract. Once you need to have somebody in to support the ADL's activities of daily living, it tends to be an incline over time because the support as we age tends to grow. And it's, it fills this gap and this need for the fact that family can do only so much. The pressure is out there. Canada right now, we have about 8 million unpaid caregivers. Something that always occurs to me is, let's say the caregiver says, I can't do this. You have companies that provide in-home care as long as the budget is part of the financial plan, that they're able to bring home support, maintain independence, aging in place.
Stock number 7, Savaria.
Okay, so a company here that makes things that can go into the home to make life easier, and the analysts who cover this company really like it. All of them recommend it, actually, even though it's a small group. They would not be surprised to see a double-digit lift in the stock if you look out, call it over the next year. What stands out?
Accessibility and mobility, again, with the aging in place theme is quite a growing area, especially when we look at bungalows. Like as we age, everybody wants to downsize to a bungalow. There aren't a lot of bungalows left. So when we think about, okay, how many houses that are 2 or 3 stories do you need accessibility to get to the laundry room, to get upstairs to the bedroom? And they provide things like chair lifts, stair lifts, in-home elevators, which again allows the whole aging in place theme. So when you look at a cost perspective, it becomes, is it cheaper to do a home retrofit to allow me to age in place because maybe it is just a mobility or accessibility issue? Or is it cheaper to try to move to retirement living where it is quite budget dependent?
And stock number 8, K-Bro Linen Systems.
What really stands out about K-Bro is that even though there aren't that many analysts who cover it, on average, they really do think there could be some major upside for this one. Tell us more about it.
As really quite as simple as that. Most of their contracts are from healthcare agencies. Post-COVID, there was really a push with increased sterilization, increased laundry turnover, increased PPE with the government contracts, with the healthcare contracts. Because they're so long in nature, it's a very consistent revenue stream. And they do have, a bit of a seasonal stream with hospitality, so hotels as well. So I think when we look at those two, hospitals period, are increasing in nature, increasing in need. And then hospitality itself tends to give it just a little bit of seasonal oomph.
Our thanks to Neela White, and thanks for watching Ticker Take here on the BNN Bloomberg YouTube channel. Ticker Take has its own YouTube channel, and you can find more information in the description. See you next time.